Hey guys, Zito here. Today I want to talk about something that's pretty interesting in personal finance, which is creating another income stream from dividends. Today we'll talk about what are dividends and my favorite dividend stock at the moment, and go into a little bit about how you can use them to create more income streams. So dividends are payments that a company makes to share its profits with its shareholders. Essentially, when a company makes net profits, they divvy out a portion of that and they give it to the shareholders. It's kind of a thank you in return for owning their shares in the company. They're one of many ways that investors can earn a return when they own a stock, and they're paid on a regular basis every quarter or year depending on the company. The best part about dividends is that it can become another stream of income if you own enough shares in a company. Here's how it works. If you go online and look up high dividend stock companies, you may find something when you click on a stock called the ex-dividend date. If you own the stock before this date, then you will earn the dividend for that quarter. What you need to do is look at the dividend yield when you're researching stocks and see if the yield is above 3 or 4%. These are typically the high dividend yield stocks. If you want to create another income source from dividends, this is the one that you want to look at, the dividend yield. It's a percentage of the total stock value. Typically, dividends are paid out in the form of cash or stock. So when you receive a dividend every quarter, you can take that cash and do whatever you want with it.
It's free real estate.
But my advice is that you reinvest the dividend. The way that it works is you turn on your DRIP investing on your online brokerage. DRIP stands for Dividend Reinvestment Program. So if you use a brokerage like E-Trade, here's an example of turning on the DRIP. You just go to the dividend portion of your account and click DRIP Invest, and this will enroll you so that any stock you buy that has a dividend, it will put that cash that you earn from the dividend back into the stock, therefore creating a stronger position in the stock. You don't always have to do the DRIP. You could just take the cash out every time, but this is a really great way to grow your portfolio without ever doing anything. So now you can see that if you have a high dividend stock and you own a lot of shares, you can really earn some solid cash every quarter with this company. Let's say that you own a tech company with a $20 share and they pay out $1 per year for each share that you own. That would result in a 5% dividend yield. So it's a really great way to level the playing field when looking at different stocks and which ones you want to buy, because the dividend yield will kind of normalize everything and be on a level playing field. So you can look at the higher dividend yield stocks and what kinds of cash returns you'll be looking at for your dividends. So one dividend stock that I've actually invested in that I want to talk about is AT&T. AT&T has been paying dividends for 36 years. When you invest in a dividend stock, you want to look at the track record of how long they've been paying out dividends. So AT&T has been paying out a dividend for over 36 years, meaning that they'll likely want to retain that track record of paying out a dividend, because that's why investors invest in the stock, because they get some cash on top of owning that stock. So AT&T, in the previous years hasn't done so well. They've actually dropped quite a bit due to some performance. AT&T is still paying off a ton of debt, over $100 billion in debt that they need to keep paying down. And they're still feeling the major cost of the acquisitions of Time Warner and DirecTV, with the latter being, probably one of the worst acquisitions in modern history. DirecTV has not generated any returns for them. As people cut the cord on cable, more people are going to streaming, but they were able to counteract that with their purchase of Time Warner, because now they have the HBO Max streaming service, which Warner Bros. Just announced that they would launch every movie from their catalog the same day in theaters as the same day on HBO Max, meaning that more people will start downloading HBO Max, and I think it's a solid play for the many years to come. I think it'll do quite well, in the face of Netflix and Disney Plus. They have a solid catalog of movies and TV shows, and I think that it was a great part on AT&T to invest in Time Warner. Because they want to retain this track record, they need to keep paying off their debt. But even if they're not generating as much revenue top line, they need to sustain that dividend yield above 5%. Right now, they're sitting at about a little over 6% dividend yield. So this is a really solid stock to own if you want to start looking at how dividends work and start reinvesting the dividend yield into your account again. In the coming years, it might get a little difficult for AT&T to pay out this dividend, but I'm going to keep owning shares and maybe buying into my position more to make sure that I'm getting this dividend growth. Dividends are such a great way to create another income stream, and I'm sure if you go on all the other personal finance YouTube channels out there, they'll talk about dividends and how you can use, dividends as another income stream other than working, other than stock investing, things like that. So I know AT&T might be an old company and it's a behemoth in the space, but I think that their 5G and fiber business are cash cows for them at this point. If they keep reinvesting in their fiber business as well as with their 5G towers, I think that they could be a solid company to own for the foreseeable future. Their dividends are one of the best in the industry in terms of telecom or technology companies, so it's definitely a share that I want to own in my portfolio to at least understand how dividends work and to keep generating returns. So the board of directors of AT&T declared a quarterly dividend of 52 cents per share on the company's common shares, and that dividend is payable on February 1st, 2021 to all stockholders at the close of business on January 11th, 2021. So if you own an AT&T share before January 11th, you will receive 52 cents per share dividend on that. You can see how if you own a lot of shares of AT&T, you could generate a lot of cash every quarter. Let's say I owned 1,000 shares of AT&T, and that might cost, $30,000, but every quarter I'm earning $500 cash on top of that to do whatever I want with, which is kind of interesting.
Well, when life gives you lemons.
AT&T says the company expects to have financial flexibility in 2021 to continue to invest in growth areas, sustain the dividend at current levels, and focus on debt reduction. The company has a lot to do in terms of next year with paying down debt and kind of reinvesting profits in certain growth areas like HBO Max and 5G and fiber. But I think that by sustaining their dividend, investors will keep flocking to this stock to get that sweet cash every quarter. They might be a dying company, a behemoth company, but I think that this dividend is kind of enticing for investors. So I know this was a short video, but I just wanted to talk about creating another income stream with dividends. I think it's a really great way to have passive income if you just let the dividends reinvest, or take that cash out every quarter and put into other investment areas. If you like videos like this related to personal finance and creating other income streams, please subscribe to my channel for that almighty algorithm.
Happy Christmas! It's Christmas!
And I can keep putting out videos like this. So I'll see you next time. Peace.